A quick audio and video check in, everyone. Should be good to go. All right. Welcome to the last episode for 2020 of Charts and Coffee. Of course, we'll be rolling the show into 2021, seeing where that takes us. All right. So welcome to your morning pregame trading show. Thanks as always for making it out. We do this Monday through Friday, 9 to 9:20. Of course, today being the last trading day of the year, it can sometimes be a pretty interesting trading day of the year in terms of the way in which, gang, we've talked a little bit about the Santa rally and the Santa, if you want to look at it this way, the unrally, right? The Santa rally and the Santa unrally. And so let's jump on over to the S&P for a moment. A lot of what moves the market at the end of the year is just jockeying around a portfolio to make it look oftentimes, well, in the best case scenario, better prepared for 2021. And in the most sort of worst or most deceptive case scenario, to make it look better than it really was throughout 2020. That's what window dressing is. And so there is one part of window dressing, which is the part of window dressing that is sort of padding a portfolio with names that have outperformed. It could be sectors that have outperformed, names that have outperformed throughout the year, especially going into the latter part of the year. Recency bias. That's one thing I would recommend. Maybe we'll do an episode on cognitive biases, but recency biases definitely influence the market, influence investor and trader behavior. And the other part is looking at the way in which that's the dark side, if you will, right? The dark side of the Santa rally, which is, what do I need to get rid of? What is underperformed? What looks lousy on my book, in my portfolio, right? And so there's that unwind there. And that definitely comes to a head the last week of the year, the last couple of days of the year, today being the very last day of the year. You'll see those kinds of losses, those kinds of lackluster performing names, sectors, ETF stocks, unceremoniously taken out of a portfolio, out of the book. And so those are the kinds of effects that we would expect with this particular trading session. So coffee today is from the folks over at Java Press, the folks that I get I manually grind all my coffee. I don't know, it's kind of a nice process in the morning. So the folks at Java Press make a roast called Power Hour, and that's what I've got in the mug, the Get After It mug today. And so this one is a dark roast. And what's really nice about the folks at Java Press, they'll roast the stuff and you'll get it within, I want to say 48 hours or something. It's good coffee. So rocking the Power Hour in the coffee. And for a dark roast, I will tell you what, it is not bitter at all. Really, really, really good. I like their coffee a lot. All right, so let's get to it. First question we have from Matthew. And Matthew asks, I love the setup on the daily chart of VIPs. How do you like it? If you have time, also PIA. Let's take a look at VIPs. Sure. Let's take a look at VIPs. Let's see. Do I like that caption? That's a big caption. Let's see if we want to go with our old-fashioned captions. But I like playing around with the different caption sizes. Oh, that's kind of cool. That's kind of cool too. All right. So anyway, VIPs, sure. Let's jump on over there and take a look. First thing we're always going to start off with is the underlying structure of the chart. Yeah, it does look good, just not from where it sits. So Matthew, I like the way the chart looks, but I do not want to be a buyer at higher highs if the market has already shown signs of having gone parabolic. And for me, what that means, and I'm sure we'll be talking about this more into 2021, but what that means is, how do you know at what point on the chart does the distance between current price and for me, comparing that to the wave, at what point does this distance actually confirm that a market has gone and is still parabolic? And I think a lot of folks do like to trade parabolic markets. They're fantastic to trade for momentum breakout entries, right? If you're looking to play a breakout through resistance on high volume confirmation, you want that to be first and foremost in a double green environment. And then you also want to get the very earliest confirmation of the market having gone parabolic. The later you are into that parabolic party, right, the more dangerous it can be, because now you're getting to the party later and later and later. And for me, VIPS is kind of in the late stage of that. Not invalid, but I would go into waiting for a pullback at this point. So I'm very seldom going to buy these kind of accelerated higher highs, but I love the market structure. Absolutely love the market structure. Okay, next question from Pablo. How could I get the multi-trend for, so Pablo, so thank you for being part of the Simpler team. So how can you get the multi? The multi is in the Simpler Futures room and in the Sector Secrets Mastery room. So my free indicators that I make available to members, mostly for setup, support, tech. I do a tech session in both those rooms, Simpler Futures and the Sector Secrets Mastery, every Friday. And so they're in both those particular rooms. So if you're in there, yeah, just log into the room, go into the room drive, and you can download the code, because you've got to download the code for the for this thing down in here. Yeah, and then you can just copy and paste it. All right. And can we take a look at Dow? Sure. All right. So when we're looking at DOW, one thing that we always want to make sure is that we understand our stocks exposure in passive investing. So that means I'm going to keep an eye on DOW and its exposure within the XLB. And this is what takes me to looking at a multi-chart, right? You guys have seen me use these charts before. And I'm kind of leaning towards a good old-fashioned, yeah, I think we'll go with I was kind of playing around with the different question captions. But anyways, back on over to the question here. XLB would be where I'd keep an eye on the relative outperformance of DOW within the context of its weighting within passive investing. All right, so having said all that, the way I'd like to set this chart up is I will keep an eye on XLB, right? That'll be the ticker below. So I want to look at the underlying ETF behavior and the stocks behavior. And you'll see the XLB has very steadily, as you can see down in here, or maybe you can't because the question's over top of it. But the XLB has been really steadily green. Dow is very steadily green. And yes, it is a good looking, buyable name. Absolutely. Yes. Okay. So thank you for the question. And that's the way I'd look at it. Baloo asks, I'm interested in taking the trading class. Well, we have a free webinar coming up on Wednesday of next week. So just a handful of days away. You can register over at Simpler Trading /hour, simplertrading.com/hour. That's the next class I'm going to do. That one's free. All right. So you can check that one out. And that's going to be at 8 p.m. Eastern next Wednesday. Okay. All right. Next up. Hey there, Trisha. Is that a Jocko? Oh, yeah, my Jocko. Yeah, it's a Jocko mug. You can even, his mug's even on the back of it. Isn't that hilarious? Yeah, it's a Jocko mug. You know, it's funny. I was just talking about Jocko and David Goggins and those kind of guys that have really had a tremendous 2020 in terms of getting their message out, and especially through social media. And, you know, it's funny. Both those, for those of you that are not familiar, they're not traders. It's really more about work ethic and working out and getting up early and all that kind of stuff. And they're very intense individuals. But, you know, it's really funny. It's so funny you asked that, Trisha. I was just talking to my husband this morning, and the one thing that they don't talk about, and I'm a big Mark Manson fan from the subtle art of, there's a bad word in it, but look up Mark Manson, The Subtle Art of Not Giving a Beep. And the one thing he brought up, and the one thing I was talking to my husband about is, at some level, these guys like it, right? They talk about getting up in the morning, and Goggins does ultra marathons, and Jocko posts his workout mat at 4:30 in the morning, you know, and yes, intense is great. Hardcore is great. I get it, but they like it, right? Doing that makes them happy. And so that's the part they tend to ignore. You know, when you're trading and you're putting in the hours that most people don't realize that you need to, especially for watch list building, trading itself, and try this for the next year, you know, talk about intensity. Flip around your current trading mannerisms, or at least examine them first, and ask yourself, am I spending more time trading, putting in the orders, you know, actual trading, than I am watch list building? And even if just for a couple of weeks, flip that around. Trade less, watch list build more. And I will tell you, almost with absolute certainty, you will see an improvement in your trading results. It's just that simple. Flip it around. Find the joy in the watch list building. Find the joy in the setup building, not in the dopamine rush of getting in and getting out. Okay. All right. Do I use a French press? Sometimes I do. My friend. Not always, though. But I do love using a French press. I do. All right. T-Doc. I do have this gorgeous stainless one. Yeah, I do like a French press. It's funny you mentioned that. I probably should get that out. So the next question. Hey there, Nick. T-Doc heading below, hanging around 200 for the day. TDOC. Choppy market, right? Choppy yellow market. Wouldn't short it, but it probably wouldn't be my favorite. But to your point, Nick, hanging above that major psychological level, and if it's going to also hang out above the 200 exponential, that would be helpful. Where is that 200? Do I not have that active? It should be. Okay, it's not on right now. So that 200 is not active on this chart at the moment, but I'd like to see it stay above the 200 exponential or the 200 simple. I'm a little bit more, I prefer the 200 exponential. Be careful, though, of these choppy markets, right? I think a couple of choppy markets that a lot of folks are getting playing around with would be things like Facebook and with Amazon. These are chopped. I don't want to short these markets, but their clarity is not going to be as good as a market that has double green status, okay? But good stuff, good stuff. Check out, oh, okay, Jordan, thank you. Check out Brooklyn Roast. All right, I will check them out. Thank you. All right, next up, speaking of Apple, hey there, Samuel. Apple, good play with earnings coming up. iPhone sales, you know, everyone bashes iPhone sales. Yeah, I hear you. So here's something to think about, and this is definitely something that I'm going to be doing in our Sector Secrets Mastery, which is this window from where we are today to, as you can see right here, earnings. All right, this is your earnings right there. If this is at least still 2 weeks, if I still have 2 weeks, 2 earnings, then I'm willing to play a run into earnings. And earnings come out the 2nd of February, end of January, something like that. So we do have that 2-week window. In fact, we're in that 4-week window. And so pullback buys into earnings makes sense. I will not hold through earnings, right? I will actually get out just before earnings. And what I love to play is that run, that rally into earnings. And specifically, it's got to be in a double green environment. So I need an uptrend to play that run into earnings. And that's typically what I like to do. So yeah, I'm with you there. Chewy. Do we have a double green environment in Chewy? Let's take a quick peek. All right. So absolutely. And this is one of those stocks. I wouldn't call this a work from home. I think this stock has done exceedingly well during the pandemic. There's certain names, online retailers that have done well. So all of a sudden, I'm not going to my local pet supermarket. I'm not going to Petco. I'm not going to PetSmart. I'm ordering my pet food from, Chewy, for example, and they've benefited in much the same way Amazon has, online retailers. So with that being said, what we have here, and whose question? Stephen. All right, so take a look. I've got the 21 exponential moving average in play. That's what those dots mean, those propulsion dots. And so I've got the 21 EMA in play. That does make it a valid but aggro level to be a buyer from. Things start getting a little bit more moderate at the 34 EMA on the high. And finally, the most conservative level I'll be keeping an eye on is the 34 EMA on the low. Sorry, the low. The close or the low. Okay. But the low would be the most conservative. So you have really 3 spots you could be a buyer from. That 21 would be the first. And absolutely, I'm a fan of looking at those double greens, finding the opportunity within the context of a pullback. I mean, that's the bread and butter of my approach. And then, sort of the same idea in a double green, but being more opportunistic on high volume momentum breakouts, finding the early stages of a market having gone parabolic. Okay. And that is really something that's going to make a big difference for those of you that are generally momentum traders. Include a pullback approach and focus those momentum trades when a market has freshly gone parabolic. And that's going to make such a big difference in your timing and your win rate. Absolutely. Okay. Sama asks, Sama, whenever I do a class or a webinar, I go through my trades. I've done so a number of times here on this very show. So check out the webinar that I'm doing next Wednesday. I will talk in detail about my performance through 2020. All right. And then you can make your decision at that point. All right. Do I have a scan for wave entries? We have a scan for the structure of the market, Paul, and it's on TOS. So I have a scan for the trade flags. We have a scan that looks at the trade flags on TOS. Yeah, and it's a custom scan that works on that. I don't believe I have it for any other platforms though, just for TOS. And that's something again we have in the members area. It's a little cumbersome to set up, but I do share the code for all that in the members area. So another tool that I make available. All right. Next up is, how are we doing on time? Oh, I just got another minute here. A2K. Hey there, A2K. Thanks for the Flex Grid with the XLK. Do I have a list somewhere of the groupings and their components for you to build out the grids? Yeah, check out etfdb.com, A2K. etfdb.com. All right. So next we have, let's see. Oh, wow. Look at the first person on Facebook I have to block. Oh, for crying. I guess that's a sure sign that I've made it. Coming and spamming my show. All right. NIO. Yeah, let's take a quick peek at NIO, and then I'm going to head on over to the futures room, do a little bit of day trading this morning for the final day of the year. So if you've got NIO, look, you just come out of a nice pullback entry, Hunter. Just come out of a nice pullback entry, right? Like this. And then now it's moving higher. So what I would say is you've got resistance waiting in this area here, and you've got, this 50 major psychological level sitting overhead. So if you can get a little bit of bullish momentum, I love to sit on the offer with bullish momentum and take advantage of that order flow in order to get a better execution when I'm exiting a trade for profit, right? So if you can get some bullishness and, look at the time to expiration you've got. I don't know completely what your play is, where from expiration, but I can just tell you from the standpoint of moving higher, since we closed near the highs yesterday at NIO, I wouldn't be surprised to see us make a run at 50, use that bullish momentum, liquidate into that. And, if you bought on the pullback, very nice trade. Okay. All right, gang. So I'm going to head on over to the futures room. I've got some day trading and some markets to scan with our group over there. If you want to join us, we do have trials. I'll have some information about trials of the futures room. And then next Wednesday, we've got our free webinar, which I'm super stoked about. And I will see you all on Monday. All right. Happy New Year, everybody. And thanks for being a part of our Charts and Coffee crew. We need some t-shirts for 2021. All right, gang. Have a great one. Be good to each other, and Happy New Year.